Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. What would it take to bring the United States and in fact the whole world into recession? We will talk about that today. I'm going to give you every nuance. Let's begin by taking a look at inflation in the United States measured by the CPI. You can see that it is at 9.1%. I outlined all the details surrounding the numbers on that in the previous video to this one. It was sort of an emergency broadcast. So many people were asking me, please make a video on this, waiting for your video on this. So I figured, let me just highlight that. So definitely check that one out. But you could see what happens. Month over month, it's increasing as well. You could notice this if you see the green area here. That is showing us month over month we come down and it's been increasing, not decreasing. But of course, inflation, the way that they measure it, is made up of several different things. So trying to say inflation, that's really a broad stroke. But when you look at it on a deeper level, my goodness, just about everything is increasing. You could see it for yourself here. Yes, the headline inflation up to this degree, but breaking it down, this is a month over month, looking at it, services, goods, food, energy, and you see how it changes month over month. But what's the trend? Because yeah, I can show you today, and then you can watch this video in 3 days from now, and maybe it's not relevant. But understand the trend. It's been heading up. Now, this has surprised me, let me tell you. To see it go, this is now the 6th month in a row that it exceeded the expectations of all the analysts. So that's unusual, to say the least, 6 months in a row going even beyond. So it's not as if they didn't think inflation was going to be high. It even went further than they expected. Okay, so you look at this just measured in year over year, okay, and you just see it. Incredible, to say the least, right? Looking at, in this instance here, over the past couple months, food has come down a bit. Why? Because when they're talking about, all those cooking oils and things that went to extreme levels like palm oil and so on, those have come down. So things like that are what that's all made up of. But in general, we've moved up in terms of price for food, okay? Then we have this, shelter and rent inflation. One of the things that I believe is so critical is to watch these different ratios of how much it costs to buy a home, how much it costs to rent a home, and things are really strange today. It's out of whack, to say the least. And so when we look at with rent, one of the reasons why, depending how bad things get, why in a recession you could actually see rents being stable or even going up in some places is that if there's still jobs in the area, people need to be living somewhere, but they can't afford to buy a house, particularly if borrowing costs are very high, but they can certainly afford to rent the house. And so that's what many do. And so you see that at a time in which today, kind of building up to that. Rent prices already extremely high. And then you look at what's happening with the dynamics here. It seems like, it's hard to because, what's happening with, in terms of recession, but it looks like rent could go even higher. Look at it. In, real terms, people are losing. And it's sad. It's sad to read this, but that's the reality of the situation. You see? In terms of real hourly earnings, when you factor in inflation over here, things look fantastic, right? But what has been doing the entire time is just basically going down. So, and this is from 2020 and onward. So we look at this and try to understand what's happening here. Well, inflation has picked up to such a degree that we have to understand this is destroying our savings. And that's compounded further because we're trying to hold cash right now. It's being eaten away, but we're saying, well, we don't want to buy assets knowing they're going to go down in price. So it's this balancing act. It's an odd time. There's so many different moving parts. And that's why you get all these silly people, we'll call them, on YouTube and other places, that claim they know everything when it's impossible It's not chess where there's a select number of moves. That can be figured out, or blackjack or whatever, where you can kind of play a numbers game. It's much more difficult than that. Okay, nobody knows what's going to happen tomorrow. Geopolitical event and everything goes up in a flash. Nobody knows, right? So some things are just so extreme, and black swan events and so on. So that was a bit of a rant. If you appreciate it, hit that thumbs up button. Support the channel by simply clicking that button down below. Bank of Canada overnight rate. You could see what had happened over the years. This is from the 90s up until the present. And, the pace at which they are increasing is abnormal, especially when they go for a 1/4 point rise, a 1 point rise, excuse me. They were going at 1/4 of a point, 0.25%. And then suddenly they started having to jack that up, right? You could see right here. So we're at 2.5% now for Canada. The last time we were here was financial crisis. Can you believe that? They didn't get back to where they were. We're already exceeding the interest rates back, in the previous cycle, 2018 to 2019. And what's interesting about this is that so many people had suggested we would never. No, they're going to leave it at zero forever. This is Canada. This is the UK. This is the United States. So many people repeated it over and over and over again. And I don't know where they got that idea. Gold waivers as nervous traders again turn to the greenback as a haven. So this is interesting because you see, typically gold is an inflation. You're supposed to hide in gold. But at least at this time, the average person, the average investor, is hiding in US dollar. And that's, you see what happens. You see the reason why. But it doesn't mean that there's no value in that commodity. It doesn't work like that. This is just showing us the price of gasoline, which has come off the highs. And that's the red line, by the way, in the United States. And you're also noticing this huge gap in between. By the way, the green is Mexico. So Mexico's gas at 3.9, significantly cheaper than the United States at 4.6. So gas prices have certainly gone up, but depending on where you are, depends on what you pay. And that goes for Mexico, US, but also, just looking at it, depending on which state you're in, which province you're in, region you're in, and so on. So the expectation here is that to calm all this inflation down, no matter where you live, it's going to take higher rates. And so for the United States, the Federal Reserve, the expectation here is increasing quite a bit, that they will go for bigger rate hikes. Will they go for the jumbo, the 100 basis point hike? We'll see. But the expectation here for no hikes, not going to happen. The expectation for a 25 basis point hike, looking less likely, but it depends on what meeting this is anyway. But essentially, all I'm trying to say here is they're going for higher hikes initially. And next year, different story. Okay, this is just showing us the Fed survey. Business conditions, it's lower than what it was in March 2020 or early 2020. That's how serious things are. And when we talk about the contagion, we talk about the spillover, and we talk about all these different things, China is one place that has some clear and obvious problems. And we're supposed to just bury that under the rug. I'm going to keep talking about it. Okay, I'm going to keep talking about it. Chinese homebuyers across 22 cities refuse to pay mortgages. Home loan payment halts may cause $83 billion of bad debt. So understand what's happening here. Where you're seeing this, people, they're saying, forget it, I'm not dealing with this. Look at what happened with the real estate market in China. They built up these empty cities. They tried to make this the biggest bubble in the world. It became worth, I think, in the 60 to 70 trillion range. I did a video about that before, but it's escaping me right now. The real estate market in China is worth something like 60 to 70 trillion dollars. It needs to be, continuously propped up, or that's going to be painful, not just for China, but for the entire world. So understand where we're at today with that. And then you got Evergrande. Oh, Evergrande's resolved. No worries. Nothing bad happened. They had to halt the stock because it was $1 and change. If it was still on the market and available, it would probably be worth negative by this point. And on top of everything, on top of the central bank activities and so on, excuse me, AC parts shortage, as in air conditioning parts, shortage continues as summer heats up in North Texas. And you get this as well, same situation. So you're seeing the heat picking up, you're watching the parts shortage, no different than the cars that are not available for the consumers because of the chip shortage, one product after another, whatever the case may be. Part shortages, people shortages, everything seems to be moving towards a perfect storm. And we are right in the middle of it all. I worry that people are simply saying, you know what, mild recession, I'll just, buy S&P 500 in a couple months from now, and I'll ride all the way into the sunset. But that may not be a good thing. I mean, I just see people who have a lot of influence over others. I see what they say, and it's just crazy. It's really just crazy. And I've noticed that both from YouTube, I've noticed that from Twitter. And I just say to everybody, do your own research. Don't be convinced because that guy bought something that you should buy it. It's just, people right now, there's a lot of uncertainty, more than what some of these people want you to believe. Okay. So that's all. Hope you appreciate the message. Hit that thumbs up button and hit the subscribe button. You know why? Because we got this club. It's called Club 282. And I hope that you would join it. 282,000 people all across the world. I'll see you on the next one. Take care.